So is more regulation in the future of crypto? If you ask the average crypto bro, they probably didn't realize that Uncle Sam is serious and he wants his fair share. So with the recent talks of more regulation in the crypto space, I figured now more than ever would be a good time to review the current requirements of your crypto related activity. What's different about this current bull run versus that of 2017-18 timeframe is that there's a lot more things that you can do with your crypto. So now you can lend out your crypto and there's various DeFi services that you can participate in. So in today's video, I'll call this part one, where we're gonna review the traditional cryptocurrency transactions. And then I'll follow up again with a video maybe discussing the DeFi services and then also the NFT space. Let's get it. What's going on, everybody? It's your favorite CPA, Brian Rivera, and I wanted to welcome you to the channel. So on this channel, I typically talk about personal finance, entrepreneurship, and investing. So if this is your first time around here, don't forget to hit that subscribe button. So first up, let's go ahead and address the elephant in the room. If you participate in cryptocurrency, whether that's buying and selling or receiving crypto in the form of services, you do have a taxable transaction. And yes, you do have to pay tax on it. Sorry to break it to you. So the other elephant in the room that I want to address is that cryptocurrency is not designed for illegal activities. Matter of fact, I would argue that cryptocurrency is actually more transparent than actual physical cash. And that is because every single transaction you perform, whether that's a transfer, you're sending somebody money, you're buying, you're selling, it's all tracked on a blockchain, and that transaction can be traced. So I would argue that it's actually more transparent than physical cash. Now, it's also not common that you hear two separate regulatory bodies comment on the same issue in the same week. So most recently, the Department of Treasury, aka the IRS, came out with some commentary about potential new disclosures, meaning if you transfer at least $10,000 of cryptocurrency, even if it's just from one wallet to another, that will now have to be disclosed on your taxes. So every single movement of money that you make will now have to be disclosed, and I believe that's going to be implemented in 2022. If that changes, I'll drop a comment in this video to update that comment. The other thing is the SEC has now commented to say that they are looking to regulate the cryptocurrency market, and that is to keep investors safe. A lot of people don't like regulation, but in my opinion, it legitimizes this as a legit asset class, and that it is going to prove that it's going to be here to stay. So regulation may not necessarily be a bad thing. So what are cryptocurrencies? I've actually got a video already out on this very topic. I'm going to go ahead and link it above. Feel free to check that out. But at its most basic form, cryptocurrency is simply a digital asset. Now, for tax purposes, the IRS considers cryptocurrency property. Property just like stock, bonds, and real estate. The Commodities Futures and Trading Commission, or the CFTC, considers cryptocurrency a commodity. Now, the SEC has also come out and says that they consider cryptocurrency not a security. So now that we've identified how cryptocurrency is taxed, let's take it a step further. So just like other property, stocks, bonds, real estate, they are taxed according to the holding period, and those are going to be subject to capital gains tax. So if you hold something less than 12 months, it's considered short-term capital gains, and you are taxed based on your ordinary income tax rate. And if you hold the asset or the property longer than 12 months, then you are subject to long-term capital gains tax. Now, the tax rates change every single year, so I'll drop a link below for the latest and greatest tax brackets, so that way if you are trying to get a ballpark idea of what to expect, you can use these brackets. Now, there are gonna be four main transactions that you wanna be on the lookout for. If you bought and sold crypto with USD, coin-to-coin transactions, payments for goods and services, and mining operations. So a picture is worth 1,000 words. So let's go ahead and give an example of what this looks like. Brian bought 2 BTC using Coinbase Pro at 19,000. He bought the breakout, the all-time high breakout, and then he sold it 2 months later at $60,000. Selling crypto for fiat currency creates a taxable event. So in this example, Brian has a capital gain of $82,000, which is subject to short-term capital gains tax. So you would then go look at what your tax bracket is, and that is what you can expect to pay tax on. Coin-to-coin transaction. Brian purchases one BTC for $19,000. After holding for 2 months, Brian traded all of his Bitcoin for 76 Ethereum. He saw the hype and he thought that Ethereum had more upside at this point in time than Bitcoin. At that time, Bitcoin was worth $30,000. In this scenario, Brian incurs a taxable event by trading his Bitcoin for Ethereum. So trading one coin for another is considered a taxable event in which Brian incurs a capital gain short term of $11,000. And how you get that is you take the 30,000, which is the date the Bitcoin transaction was closed, minus the 19,000. That is the cost basis of when Brian purchased it. And that's how we get to the $11,000. Now, mining operations. Brian runs a cryptocurrency mining operation. Every day, Brian mines 0.5 Bitcoin through his crypto mining rig. In this scenario, Brian would recognize income for the USD value of 0.5 Bitcoin each day. For example, if Brian mined 0.5 Bitcoin on May 31st, 2021, he would recognize $18,500 as Bitcoin was trading at roughly $37,000 per coin. So half of a coin would be half of that, and you would recognize the fair market value on that date. I know that was a mouthful, but trust me, as this gets more adoption, it will become simpler. All right, so the last example of one of the 4 transactions that we're gonna discuss is payment for goods and services. So let's just say my barber says, you know what, Brian, I don't want you to pay me in US dollars anymore. My favorite coin is Chainlink. So go ahead and send me Chainlink every time you come get a haircut. When my barber receives that Chainlink, he has to record the fair market value of that coin in US dollars, and that is reportable as ordinary income. Or let's just say my video guy, my video editor, doesn't want to get paid in US dollars. He wants to get paid in USD coin or Tether. In that same scenario, although that is considered a stable coin, he still must report the fair market value of that crypto on that particular date. So there's going to be 2 types of events where you will not have to pay any tax. Well, guess what that is? So number 1, if you look at your hands and they're full of diamonds and you are part of Team Diamond Hand, you don't have a taxable transaction. And that is because you did not sell. Your hands are unbreakable. They can't pry the crypto out of your hands. So if all you're doing is buying dips, buying, never selling, guess what? You don't have a taxable transaction. Number 2, if you transfer crypto from one wallet to another, maybe you said, hey, you know what? I'm gonna move my stuff from Coinbase over to Kraken, or I'm gonna go from Kraken over to Binance US. When you're moving money from one wallet to the other, that is not a taxable transaction. But if you do remember, I mentioned earlier that the IRS is coming out with some guidance. You wanna be careful on how much money you're moving, because if it's over $10,000 in the future, you will have to disclose that. Now, how do you report your crypto on your taxes? So if you have a capital gain or capital loss from your trading activity, this is actually reported exactly the same way as if you were trading stocks. So you are going to report all of your transactions on a form 8949. So if you've got over 10,000 trades across 3 different exchanges, every single one of those trades, the buy and the sell must be reported on form 8949, which eventually flows to Schedule D to your 1040 tax return. Now, the cool thing about cryptocurrency is they are not subject to wash sales, so you do not have to worry about wash sale transactions. So if you earn cryptocurrency from mining operations or from services performed, this is considered ordinary income and is reported as such. So some of the challenges that I see traders go through, me being a practitioner, I get to sit on the other side and I sympathize with a lot of these other CPA firms and taxes, because keeping track of your crypto is an absolute mess, especially if you've got multiple exchanges, multiple wallets. You're moving money all over the place. It's just extremely hard to keep detailed records. I'm talking everything from your cost basis, the fair market value, the date of when you sold. So it's just extremely important to make sure that you keep detailed records, keep your life simple, and also help your CPA. So the other challenge I see is that the exchanges do not have reliable capital gain or loss reporting. So this is no dig at Coinbase. This is no dig at Binance. The problem is they have no way of identifying your cost basis. For example, if I moved 20 Ethereum from Binance to Coinbase, and I decided to keep trading at Coinbase. Well, Coinbase doesn't actually know the cost basis of what I purchased the original Ethereum for. They just know the activity that took place on their exchange. It's very tedious and it's very hard to solely rely on the exchange data. You got to have adequate and tedious record keeping. And one of the other things too is if you go to the Coinbase website, they do actually have a disclosure on this of where, profit and loss may or may not be extremely accurate, and that is because they have no way of knowing where the money is coming from, where it's going. They just know the activity that takes place on their particular exchange. So a lot of times I will hear comments on social media, or I hear people say, I don't got to report this. IRS doesn't even know. They living in the Stone Age. Well, the IRS does have a way to track your cryptocurrency, and I'm going to tell you exactly how. One is through the 1099 reporting system. So these US-based exchanges do report your trading activity to the IRS. You will receive a 1099-K. They will also send another copy to the IRS. When you go to file your taxes, if there is no cryptocurrency activity present, if you didn't check that box that says, yes, I did have or hold, virtual currency during the current tax year, you may get a CP 2000 letter that basically says, hey, you need to disclose or you need to amend your taxes to show your cryptocurrency activity because your exchange reported to us that you had some activity. The other way the IRS can identify your activity is blockchain analytics. So most recently, the IRS contracted with a company called Chain Analysis. They spent somewhere around $10 million, and they are running analytics on the blockchain to look for tax fraud and money laundering. So in the future, I would expect that the audit rates around cryptocurrency will probably go up as they get more comfortable with the technology and as they have more participants in the market. They will be looking for non-reported income. So what happens if you decide not to report your cryptocurrency activity? If you intentionally do not report your cryptocurrency activity, this is considered tax fraud. So if you intentionally say, you know what, I know I made money trading Bitcoin, but I'm not reporting it because the IRS doesn't know, that's considered tax fraud. Now, the IRS can enforce a variety of different penalties, interest. It can go all the way up to 5 years in prison, $250,000 in fines. There's a whole bunch of things that they can do. And if I were you, I would probably not want to be on the IRS's radar. So I know the IRS has done a couple of things to try and remediate this particular situation. In the past year, they've sent out over 10,000 letters, basically saying that, hey, we know you participated in crypto. You may have unreported income. Please amend your taxes to show that particular information. The other thing that they've done, they have most recently updated the current 1040, which now requires you to disclose basically a yes or no if you participated in any types of cryptocurrency transactions, whether that's buying, selling, or receiving it in the form of services. So in my humble opinion, I feel like with this much scrutiny around the cryptocurrency asset class, it is definitely proving the legitimacy of this thing or this animal, and it's here to stay. But also, I would imagine that the audit rates around cryptocurrency is going to skyrocket because that is lost tax revenue for Uncle Sam. Now, if you forgot to report on accident or it was an honest mistake, my advice would be go ahead and amend your taxes. Go to your CPA, or you could do it if you're comfortable. You file what's called a 1040X, which is an amendment that basically allows you to make any adjustments to the original filed tax return. It's much better that you come clean if this is you than letting Uncle Sam find you, because if they find you, it's going to be a whole lot more trouble than you just coming clean saying, hey, yeah, I made a mistake. I filed my taxes. I forgot to include this stuff. So now I'm including it. Now, the other thing is if your cryptocurrency trading is at a loss, you could amend your taxes, and that could mean additional tax dollars back in your pocket. So it works both ways. All right, guys. So I know today's video was a lot of information. My goal was to give you guys a high-level overview of some of the common cryptocurrency transactions, especially with all this talk in the media about regulation. It's already been there. You've already had to report it. So I just wanted to highlight what the requirements are for US residents. So if you found value in today's video, don't forget to destroy that like button. And I sincerely wish you guys the best of luck on your trading journey. Have a good one.